Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain. Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. And of all weeks, we really couldn't have picked a better week to have Alex Blum, who is the CEO of 2 Prime, on our podcast, because there's really a lot going on. Just the whole financial scene that's going on in the world and how it's actually impacting not just the regular, traditional financial instruments, but also what's going on in terms of how fiat's being impacted. And, there's a lot of stuff going on in terms of forecasting of the global economy. But before we go into all of that sexy stuff, let's first introduce Alex and say hello to him. So in the first instance, hello, Alex, and welcome to Crypto and Blockchain Talk.
Hey, thank you. Great to be here.
Excellent. We're glad to have you here. Now, you have this company, and it's called 2 Prime. And a lot of people who are your clients are pretty much like the high net worth investors. Are they mainly retail investors, meaning individuals who have quite a bit of money, or do you also do institutional investors?
It's a blend. So it's either high net worth individuals who are, the minimum requirement is to be an accredited investor, which means you have a net worth of $1 million excluding real estate, or have had tax returns showing income of $200,000 or greater over the past 2 years, or if you're married, $300,000. And then we have some RIAs and some of their clients, as well as some family offices, and then some small banks and institutions, and are also in ongoing conversations with large banks that you would have heard of.
Excellent. Our audience loves to know who they're listening to. They like to know also that who they're listening to has a right to actually be listened to. So I would like to know a little bit about your background. And I also would like you to go into the people who are on your team a little bit, because I also just found out you've just added a new director to your team who apparently was once part of Goldman Sachs, and he is very much in the know. And I don't really want to take away from this, so I'm going to let you go into how you actually got into this space and the team that surrounds you.
I appreciate that. I mean, it's been quite a, I would say, circuitous path to arrive to where I'm at today. In 2013, I actually first got involved with Bitcoin and crypto in late 2012, 2013. I was actually a volunteer in the Peace Corps in Panama, and I lived in an area with no phone or internet service or electricity. And when I got home, I was trying to figure out ways to do efficient remittances to people with no bank accounts, like where I lived with this indigenous tribe, and came across Bitcoin and Ripple as, a sort of fringe solution at the time. And once I started learning about it, I kind of, you go down the rabbit hole, and it's, endlessly fascinating on a political, social, cultural, economic level, and have been involved in different ways ever since. I started working at when I was in grad school, a venture capital fund that just kind of out of pity, when I needed work, had me do some research on Bitcoin mining and some early stage Bitcoin investments that are now have become, multi-billion-dollar companies. Along the way, I also worked in traditional finance, was an analyst at Merrill Lynch for a while, and then worked at a hedge fund in the public equity space focused on trading VIX derivatives, so high volatility options trading effectively. Then following that, I started a company. I was doing consulting work in the blockchain space. I've done stuff for the World Economic Forum, the Gates Foundation, and a number of other Fortune 500 companies. And then started a technology company, fintech company, focused on compliance for blockchain-based investing and regulated financial products, and operated a broker-dealer to help fundraise for projects alongside the software for compliance. One of the investors in that, named Mark Fleury, he and I spun out and started this hedge fund that we now operate, 2 Prime. Mark previously was the founder and CEO of a software company called JBoss, which was acquired by Red Hat for $350 million in 2006. It was one of the first open source software companies, kind of a predecessor to blockchain and crypto and all the stuff we've seen today. Additionally, on the team, our CIO, Nathan Cox, used to work with me at this Volatility fund that I previously mentioned. And before that, managed a 9-figure family office. I think you're referring to Hadi Kabalan, who's out in Dubai, and previously was at Bessemer Trust, Goldman Sachs, was focused on the technology investing space, and it works as an advisor to our fund today. The fund currently has AUM around $100 million, and there's actually 2 separate funds with 2 different strategies. But
so why are there 2 separate funds? What's going on there? Sure.
So, initially, the way everything started was Mark and I both had a significant amount of Bitcoin and Ether, and started thinking about how we could use options to hedge downside risk. So we started kind of playing around on options platforms. And then we brought in Nate, who is very, very expert in managing risk in such a way. And yeah, originally it was just for based on our own interest to kind of not have so much of a downside risk event that you often see with the volatility of crypto. Once we kind of got our footing underneath us and the volume of the options markets increased, we created a formal product that was investable for outside investors, and started with our friends and family, and it has grown since then. As we've gone along the way, we started looking at, what are other things that are of interest to people. The main fund that uses derivatives to hedge risk is really a directional fund that is trying to participate in the upside of crypto and minimize some of the downside. The second fund is more of a debt or fixed income product that's more focused on wealth preservation and a yield. So, our flagship fund called the Digital Assets Fund returned in the past 12 months has returned about 620%. And Bitcoin's done about 380% in the same time. And, the goal is to outperform Bitcoin effectively. The other fund has a yield closer to like 25%, but it's, not going to have a downwards, you're not going to lose your principal on investment. And so it's lower risk and lower reward. And so it's more like if you had a 60-40 equities debt portfolio, this kind of covers those 2 buckets within the crypto space.
The great thing is that the podcast before this one is going to be our interview with the CFTC, where we actually explain everything about derivatives and options and what that means. So it's actually, I think, a really interesting topic, or I should say an interesting area or arena that you ventured into, especially because there are a lot of investors who are looking at this space. It's quite hot, this space, especially with everything that's happening at this moment with crypto. And, it is extremely volatile, but it is that volatility that does create massive amounts of wealth for many people.
Volatility in itself is neutral. It's not good or bad. It's just a thing, right? It's just a fact or feature of an asset, and some have more volatility, some have less. And it's really what you make of it. Like, you can make money when things go up or down if you're, trading or thinking about it correctly. So as long as things act in the way that they have historically and, continue to make sense or are coherent, then we're able to take advantage of that pretty well in the fund and aren't just, dependent on Bitcoin going up to succeed.
Okay, so let me ask you this then. Is the one that has the less risk, is that your new liquid yield fund? Is that what that one is?
Yes, exactly.
Okay, so, and then you've just made this, I was looking at your press releases, and you basically just reached your milestone. So it's a congratulations and a virtual champagne here of 100 million US. Yeah, no worries. Yeah, congratulations. 100 million US dollars in assets under management of that fund. So I do have to ask you, is that just one really rich bastard, or is that a number of very, very wealthy people? I mean, how many clients does it take to actually reach 100 million? Is that quite a big endeavor, or are you just like casually writing an email as you sit in, the Trident Cafe in Boulder and just ask people if they want to join?
Yeah, so it's between the 2 funds, we have about 25 clients currently. Some of those are very rich bastards, and some of them are just regular rich bastards. And the minimum for both funds is $500,000 investment. So there's people well beyond that in the 8 figures, but that's the minimum. So really, started with our own money, and then kind of, we do like a monthly webinar and put out some reports, but the vast majority of the clients have been through referrals from existing clients. So especially, when you have a year where you return over 600%, it's not hard to get people excited or refer their friends to you. And so we just try to consistently do what we say we're going to do, which is, hedge against downside risk and outperform against Bitcoin. And, the rest is pretty much taking care of itself. So, it's definitely work to stay organized and follow up with people and get investment documents signed. But we're not, cold calling strangers to do that.
It's not like Wolves of Wall Street. It's more like The Big Short. No. It's not. No, I don't want to. I don't want to say that because it's not. I mean, basically, I love that movie. By the way, The Big Short. I love those two guys.
Yeah, it's a great one.
Yeah, and those two guys are from Colorado as well. They like.
That's right. Yeah,
it's crazy. They just started a hedge fund out of pretty much nothing, like you guys did. So maybe Colorado is the place everyone should head if they want to start a hedge fund.
It could be. Yeah.
Yeah, I think you're setting a trend here. Or you're following a trend. I don't know which one yet. So in itself, Evergrande is going to have an impact in one shape or another on elements of the global economy for sure. And the funny thing is that the looming failure of the world's most indebted property developer is definitely capturing the attention of investors everywhere around the world. And it's absolutely impacting all markets. Do you think Evergrande is going to have a much greater impact on crypto than it will have on the other traditional markets?
Yeah, so first of all, I'd say I'm no expert in Chinese real estate corporations.
Yeah, but this is a big sucker. I mean, it's going to obviously have an impact on China and everything that China invests in, the Chinese invest in, I should say, and China. Because obviously when governments also have large pieces and they're speculating into companies, and then of course it's so huge, this earthquake is the type to be felt definitely outside of just China, because even the United States, who already is kind of interesting because they keep issuing these kinds of statements in the U.S., and I haven't seen it so much in Europe, which is where I'm based. But I've seen it definitely in the United States where they keep coming out with statements and I would say even warnings that there's soon going to be some kind of financial crisis and a pretty deep financial crisis, which no doubt you also have heard these same things, especially because you're sitting in the United States. So how do you think crypto will perform because obviously when you're dealing with the kinds of funds you're dealing with, you have to obviously have some kind of foresight. So when you're looking at what's happening in terms of, crypto is volatile, but so is everything else at this moment in time. When you're looking at what's happening in terms of the messaging coming out from the U.S. government, and they're saying, look, there's going to be there possibly is going to be some kind of financial crisis looming in the very, very near future. How do you think this is going to impact the crypto markets? Is it going to be the same as, when we've already been through one massive crisis? And I hate even talking about COVID. I really do. I can't even stand that topic. Not anymore. But it is one of the related issues that came out of COVID was obviously there was huge financial impacts in many sectors. So I'm going to just leave it over to you to wax lyrical on what you think, will happen given what they're saying in the United States and what is happening in China.
Yeah, so I think that the Evergrande situation has been an interesting sort of test case of a larger kind of macroeconomic environment that we're in. To me, I understand the context to be there's been unprecedented amounts of new money printing, or euphemistically called quantitative easing. The economy, the real economy, is suffering in many ways. There's people that there's companies that both can't hire people because their wages are too low, and then everywhere I look, there's restaurants and shops trying to hire people, help wanted signs. At the same time, there's educated workers who can't find real employment. With the backdrop of COVID has been adding more complication to all that stuff, and a recovery that's not going as quickly or smoothly as I think the Fed or foreign governments would have wanted. On top of that, I think that, we're at unprecedented highs on pretty much any asset you can think of within venture capital, within the public stock markets. Everything is well beyond, historic levels. And it just seems like it's founded upon very little, much, pretty much just thin air and, new money being printed. At the same time, inflation is at huge rates that the government is understating and is still out of their control. And interest rates are so low that there's not many tools that the government has to really take any action against it. Additionally, I think people are kind of like, at a party playing musical chairs, and everyone knows that the party's going to end pretty soon, but doesn't want to be the first one off. And so when you have a little tremor like the Evergrande situation, it starts to harken back to 2008 and a major financial crisis that was, precipitated by Lehman, and then a cascade of many other firms that were all systemically at risk. And so, I think in the case of Evergrande, it seems to me in the short term, it is a somewhat isolated issue, but it's also freaked out the markets where you have the actual event, and then you have the emotions and perceptions about the event where people start running off to the sidelines to grab their chair because they think this might be the moment, which causes more of the behavior everyone's afraid of. And so it seems to me, I'm used to kind of not understanding what's going on in China in the sense that there's, within crypto, often conflicting reports about, mining things and rules and laws and all sorts of conflicting stuff that usually ends up taking some time to understand. I've heard different reports that the Chinese government's saying to prepare for Evergrande to fail as a company, and then other reports that there's been an injection of $120 billion of capital into the markets to preserve some of the debt and all sorts of things across the board. The short answer is, I don't have any special insight into what's going on there. I think how it affects crypto directly is, well, I think first of all, we should define two things. There's, crypto, which to me is just talking about assets that are tracked on a blockchain, is a very broad category from, stable coins that represent dollars to Bitcoin, which represents a scarce supply of something maybe akin to gold. And then there's software platforms like Ethereum. So you're all across the board. But I do think broadly, the ones that have volatility or some kind of investable asset risk that aren't stable coins that are backed one-to-one, what you have is both within crypto, I think people see it as the only safe haven asset because there's a finite supply of it. It's governed by mathematical rules rather than human policy. And then I think people outside of that kind of crypto echo chamber see it as just another risk-on speculative asset, and it's largely performed like a tech stock or super high-risk, risk-on asset. And so when you have tremors in the larger macro economy, people move out of risk-on assets first. And so I think they're more impacted than something like a bond or treasury note or whatever. And so, I think despite what crypto people or crypto insiders would like to believe, that's the way most people treat it. And you see a lot of correlation between downturns in the equities market and movements almost in a leveraged way of how Bitcoin reacts. I think that may see some kind of paradigm shift with, it just seems like with all this money printing, with an economy that's transitioning to sort of a new era past whatever you want to call the information age to maybe the automation age, something like that nobody really knows where we're going. And with the speed of the internet and communications, it's outside of any human or group's capacity to control. And so I think that, we believe that things that are governed on a blockchain are just better operating systems than, fiat currencies or traditional finance rails. And that, the irresponsible financial policy that has led us to this situation is not something that can be easily backed out of through Fed policy. And so there will be some kind of regime change to both a different technology and a different type of asset that is considered, a safe haven. But in the short term, that might be not so clear. And so, yeah, that's my wax poetic on some of those topics.
And that was awesome. You really did touch pretty much everything in what you just said. Well, what I can say, before we move on to the next topic, what I can say is that the stock markets in Asia were up for sure on Thursday, because I'm looking at it, on signs that the Chinese authorities were actually going to take the necessary steps to avoid a meltdown from the collapse of Evergrande. And for instance, Hong Kong's Hang Seng Index rose 1.2%, and shares in Evergrande itself lifted 17.6%, but it remained down 81% year-to-date performance. So, it's actually, and that's pretty much what you said as well. There was conflicting reports, but it does look like, just like many countries in the world have been bailing out other companies, it looks like the Chinese government definitely has a vested interest in making sure that it doesn't create the waves that we were talking about with the, the pebble in the pond scenario. So I think it's actually
Right.
really quite interesting that, though, because many people, I think, were prompted by fears of Evergrande's potential impact. And that, I think, did lead to Bitcoin dropping lower than it was today, because it hit about 40,000 at one point. And so I think that was definitely because, like what you said, many people were thinking this is that moment. Go, I think, from China now, if you don't mind, to El Salvador a bit. El Salvador, and we covered this a little as well on a prior podcast. But, it's been 2 weeks. Actually, it's a little more than 2 weeks since El Salvador officially became the world's first economy to make Bitcoin legal tender. And this actually was also the day we saw Bitcoin's value plunge. And, there were preloaded Bitcoin wallets for citizens, and it was called Chivo, and they had to be disconnected in El Salvador because they had technical glitches. Now, it doesn't look like, from what I've seen in this entire picture, that things have turned, a corner for the rosier side of life. There has been, as there's been a lot of people who have been on I'm talking about the citizens of El Salvador, have been, for some reason, really railing against, Bitcoin being one of their de facto currencies. And while businesses in El Salvador are required to accept Bitcoin for goods and services, many businesses are still refusing, saying that they would rather lose the sale. Were you aware of this? And, the thing is that there's a lot of technological hindrances, which basically, this is why a lot of businesses are also saying that they're kind of not very comfortable with everything to do with Bitcoin. In other words, does everyone remember when their parents said something about the internet? And then there's that famous clip, clip of Bill Gates explaining to David Letterman about what the internet was. And David Letterman was like, it sounds just useless. I mean, we already have radios. We already have tape recorders. We don't need this internet thing. And it's absolutely hysterical. But, we're obviously at this still, years and years on, over a decade on from when Bitcoin first launched, we're still having this adoption issue. And they installed a lot of Bitcoin ATMs around El Salvador, a couple which I think have been set on fire. I don't know how many, but what do you think then about Bitcoin being adopted as legal tender? Do you think it was rushed through by the president, whose name is Nayib Bukele, or do you think it was something that really will have, even though it's having major teething problems right now, do you think it's something where it will have in the long run a better impact for the country?
Yeah, so I think there's a lot to unpack there.
Yeah.
So I think, one is, if you look at the historical context of the U.S. or Western intervention into especially Latin American countries, it's a really pretty sordid and messed up history of us, ousting through CIA operations and government operations, democratically elected leaders to put in place authoritarian leaders that were on board with our loans programs and the IMF's loans programs, and basically creating a dependence or patriarchy with the U.S. and Western governments in the lead, even issuing bad loans that they knew were probably going to default so they could further kind of capture infrastructure and dominance in these countries. And it's when you have a second, third tier economy, it's pretty hard to get out of that cycle. At the same time, I think also we tend to, I don't know much about El Salvadorian politics and, or I don't know the president, but I can say I lived in, Panama. I was in the Peace Corps, and I think it's also difficult to judge, the behaviors and actions of people in very different contexts from ourselves. So, we can stand in our, homes with electricity and power and food stocked in grocery stores and start to judge and say, why don't these people act the way we do? Why don't these governments respect everybody's rights? But it's a very, very different context with people trying to overthrow the government, a lot of violence and death of political leaders. And I also don't really trust the news that I get on El Salvador to know good or bad. I don't have any idea what's really the truth, is the reality for me. What I can say, though, is that I think it is an interesting action and a bold action to at least have some other optionality other than the US dollar as legal tender and as a source of funding and investment that isn't just dependent upon the dollarization of a country. We've seen really negative reactions to the El Salvador's move from the IMF and other kind of entrenched incumbent interests of the West because it's a major threat. And, the US government's number one source of control over the world economy is the dollar as the reserve currency. And so any kind of defection from that is a really scary thing for the US government, for the West, and everybody that's dependent upon that global reserve currency in general. I think that what's going on a technical level, it's pretty amazing. You can go to Starbucks and McDonald's in El Salvador and pay with Bitcoin on an app instantly with no fees. That's pretty amazing considering it's a technology that was invented a little over 10 years ago. I think that's incredible progress in such a short amount of time. I also know the owners and founders of the company that puts ATMs in El Salvador, and my understanding is they're seeing about 5 times the projections in usage that they were expecting, is what I heard from them. So, I'm not on the ground. I don't have any of that data directly, but that's what I heard from the people that run those ATMs. I think some of the technical issues, our U.S. government launched, public health care and the, website didn't work for months. And so I don't think it's a big deal that, an app that was launched, 2 months after the whole thing was announced didn't work perfectly on day one. I don't think is a huge problem. And beyond that, I think there's also, this, once you have sort of a tipping point of one government or multiple governments that start accumulating Bitcoin and making the population able to use it, I think that there's going to be sort of a race to acquire it because it has a finite supply. And even just as a hedge against other countries buying it, you need to start acquiring it. There's sort of a brinkmanship of financial protection for your economy. A number of other countries have already acquired Bitcoin through sovereign wealth funds and other kind of side vehicles. And so I think it's just the first step in a long process. And I think lastly, Bitcoin, I'm not sure that the best use case for Bitcoin, at least as of today, is as a payment for food and stuff. I'm certainly not going to buy food with Bitcoin because I think it's going to be worth 10 times as much in a couple of years. And I have dollars that are, rapidly inflating I can buy the food with. I think that, it has other use cases already. It's a great investment, either a risk-on investment or a, replacement to gold with maybe some better upside, as well as a thing that I can have as sovereign money that, if I understand the technology, can't be confiscated or taken by governments that, want to control or oversee every inch of the economy. So I think those are all, valuable things. And as the use cases extend, it maybe will become a payments thing over time, but it is a little bit too volatile, in my opinion, for it to be that as of now, unless you immediately convert back to a stable fiat currency. And I guess the last thing I would say is that, if you look at Facebook, you could look at the technology of Facebook. If nobody used it, it wouldn't be very interesting. It wouldn't be very useful. The same with Twitter or any kind of network technology. There's a time it requires just for mass adoption and network effects that create the value. The same with email. If only 4 people had emails, it wouldn't really be that useful of a technology. And so I think some of it is just the slow adoption of different use cases for Bitcoin and other cryptocurrencies that will continually increase the value of it, just like it happened with the internet, a few decades ago. And so I think we're somewhere along that adoption path. It's a major, ambitious goal what Bitcoin is seeking to do, which is displace fiat currencies and which is effectively displacing the power structure of the entire globe. And so if it takes, a couple more years, I could understand that.
Well, I love everything you just said. And going back to what you were saying with, the United States, obviously the US dollar is the unofficial official currency for many nations, as you already alluded to, and that includes El Salvador. But and of course, there's other countries who also like to use the US dollar, who have adopted Bitcoin as one of their legal tenders, i.e. the Ukraine. And, they like US dollars in Ukraine, which of course is, halfway around the world as opposed to El Salvador. Although it would be interesting to look at the distances on a map. But anyway, the point I think I'm getting to here is that currently, I'm just trying to think how many years we've been discussing it on this podcast. For the last maybe 7 years on this podcast, we have been talking about the United States and launching their digital dollar. Yeah, a digital currency, basically a CBDC, just like China did. And of course, they were the first one to successfully and massively launch a CBDC to their citizens, and it's a very successful launch, and they're still working with this project, and they are serious about it. Probably also one of the reasons why they're not too keen on people mining Bitcoin within China. But of course, it was only, questions were being asked by myself constantly saying, what's going on with this digital dollar project? I then did a scrutiny where I could see that there was the U.S. government, no less at one time than 4 digital dollar committees, which I don't even think half of them knew the other half existed. And as always, you have too many cooks in the kitchen. But another missive has been shouted out recently saying that the Fed is definitely again going to a serious evaluation of launching a CBDC, a U.S. CBDC, and the Fed is pushing ahead with this study to figure out how to implement its own digital currency. I should say whether or not in the first place, but assuming that it will, how they're going to go about it, and then they're going to be releasing a paper on this issue shortly. Now, it is, and I use the word apparently a lot because every lawyer I've had on this program told me to. But anyway, apparently no decision has been made on this matter yet. And the Fed has also come out with a statement saying that they do not feel pressured in any way, shape, or form to do something quickly, and they don't really give a monkey's what any other country in the world is doing in terms of crypto. So I just want to ask you this. Okay, so let's just say the United States did come out with a CBDC. Don't you think, just like the US dollar was trumping other currencies out there when it was just fiat land, don't you think that a digital dollar will also just end up wiping out many other cryptocurrencies? And I obviously understand that you have a little bit of a difference between a stable coin. A CBDC in most parts should be a stable coin, but there is a little bit of a difference between a stable coin and I want to say regular, it's almost like regular and unleaded, right? And the regular cryptocurrencies that are out there. And of course, regular cryptocurrencies range from, these very well-known, tried, true, and tested blockchains that they're based on, such as Bitcoin. And then you have, of course, altcoins, and they have another name, which I'm not going to say on this podcast. So there's this whole stream of cryptocurrencies, which, don't you think when you do have countries like El Salvador who come out with, hey, listen, we're going to be supporting this Bitcoin, how do you think a country like El Salvador will react? What will just happen in terms of then saying, okay, yeah, now the U.S. now has a digital currency too, and no doubt it's going to come out with some benefits with it. I can't see the U.S. government just coming out with a vanilla coin. You know what I mean? I can't just see it just being like, oh, listen, it's just, you're just going to use it as a stable coin. I can actually see this as doing something with benefits. Friends with benefits. So anyway, crypto with benefits. But, I don't know. What do you think?
Yeah. So I like your questions. They're like very complex thoughts.
Yes,
what do you
they
think?
are. Yeah. What do you think about this really complicated, convoluted picture I just painted for you? Unpack it all, please.
Sure. So, first off, I think that we have blockchain, or Bitcoin was the first implementation of a blockchain, and so it had specific rules for it that said, you could create a wallet without, giving up your identity, and that it's perfectly immutable and unchangeable. And that, there's this whole dynamics around mining and the way it's secured and stuff, which was an idea about freedom and privacy and security. But if you change some of those rules slightly, you can have the exact opposite. And that's what's happening in China, and that's what's going to happen with any blockchain-based digital currency. You have the same setup, except every crypto wallet assigned to it is assigned to your known identity, or there's some kind of biometric marker associated with you accessing that wallet. Well, all of a sudden the government has complete oversight, control, and transparency into every single cent you move anywhere in the world. And I think that that's an incredible amount of power to give somebody. They already have nearly that much power, but we have paper money that allows for some anonymity and older technologies. And it's not that you have to be up to nefarious means or doing something illegal to want to have privacy, and understand that like governments tend to overreach and not always treat everybody well based upon interests of their own power that may not always be aligned with our own. And so the fact that these CBDCs arise isn't going, I believe, going to be a threat or competition or wipe out things like Bitcoin or non-fiat currencies using blockchain, but are going to make the need for them even greater, because privacy and security and sovereignty over our own money and actions will be at an even higher premium as control around governments increases with these technologies. Additionally, I think that the fact that China and other governments are exploring a blockchain-based digital currency just speaks to the fact that this technology is better on a number of levels, both from a tracing and transparency level to an efficiency and cost effectiveness level to a software-based, non-legacy approach to payments, finance, and the global economy. And so, they're not going to say it, but they're sort of seeding the idea that, oh, wait, this is a better technology and we're way behind on it.
There's a bunch of things I wanted to say to a bunch of stuff that you said. One of the things that you just touched on, right, was privacy, right? And by the way, I just want to say before we go any further, I have so much respect for you for being in the Peace Corps. I think I think that is so solid, and you get total recognition. And I hate the word props. I can't use it. I'm sorry. You get total recognition from Crypto and Blockchain Talk for doing that. That's amazing. But you see, the thing is, hey, no worries. Let's just talk about this privacy thing for a minute, because let me tell you something right now. The minute social media started many, many moons ago, people decided that they really didn't care about their privacy. They threw that out the window as fast as they could, especially if it came with some kind of benefits, okay? And even after it was proven that companies, i.e. Facebook, will completely take your data and they will do whatever the hell they want with it. I mean, I'm not being funny, but Mark Zuckerberg knows more about you probably than any girlfriend or wife that you will ever have will know. I mean, that's just a trade-off that many people, but not me, folks. I don't have a Facebook account because of that. This is what the trade-off is, yeah? And people are obviously okay with it, because if they weren't okay, then these companies wouldn't be as massive as they are today. Because, of course, every single one of these companies, they are doing some kind of God only knows what, within the surveillance of the platform that they are building. And I'm not trying to be a tin hat theorist here. I'm going to get to my point right now. The thing is that a lot of people are saying, oh, CBDCs, the government is tracking this and tracking that, et cetera, et cetera. The Chinese digital yuan, look, they're going to be tracking their citizens. It's disgusting, et cetera, et cetera. And I just keep thinking to myself, you are totally insane if you don't think that's already happening. It's just, and if the government, for instance, wanted to get all of this data, let's just say, from Facebook or Alibaba or Kakao, and I don't even care what the platform is or the country, everyone's fooling themselves. Tomorrow, the U.S. government, without even asking, can download this data, because believe me, for every hacker, there's one who's smarter. So, so it's a little bit, I understand what people are saying about CBDCs and tracking people and the government and the Big Brother thing in 1984. I totally get it, right? But when every day we are exposing ourselves as the human race to exactly this very thing, it's not going to make a damn bit of difference if a CBDC is out there doing that or not. It really isn't. I don't know. What's your opinion on that?
Well, I think that one, it's just like like Rousseau's social contract says that we give up some freedoms in exchange for the kind of the benefits that government brings us, and we cede them some authority. But I'd say that in a similar way, like we didn't really consent to that social contract. I was just born into the world, and all of a sudden there was a government in charge of me, and so there wasn't really an option. In the same way that I think when social media technologies were emerging, people really didn't know what was being given up. They were excited about being able to connect with their friends and share some stuff. And it really was more of an emergent property over time that it was so data farmed and monetized in a way, but was not really, I didn't know I was signing up for that when I was in high school and created a Facebook page.
Yeah.
And once you kind of go on the other side of it, then it's over. However, I don't think there have been alternative technologies that allowed for me to do some of those similar things, but without giving up so much of my data or privacy. I think that blockchain makes it possible for you to retain your own data and have control over it. And I mean, I think a lot of people make that choice that they exchange some of their privacy or maybe more than they know in exchange for some of the benefits of social media or some of the dopamine excitation that it provides. But other people like yourself and many, many other people at least have the option to make some conscious choices about that. And I think having alternative technologies to what the mainstream economy or governments offer as the viable solutions both put some checks and balances on those technologies and also just allows, I think, is critical. And, we don't live in a perfect world, and a lot of people are probably not fully apprised to what they're signing off on with people's terms and conditions in businesses. But I think we have to at least fight for privacy and rights, whether or not we exercise them at any moment. And I think it's core to being a human being.
Absolutely. In terms of protecting human beings, obviously that's what this falls under. It falls under protection. And,
Yep.
Then you look at what the SEC is doing, and they're trying like mad to protect people from being hurt on this. And this, I'm referring to an article I was just reading about how Gary Gensler is desperate to make sure that people are not going to get hurt in the new land of crypto, the happy land of crypto, where people go skipping down yellow brick roads and everything else with baskets in their hands. And, I just have to ask you, now you obviously have clients who are near and dear to your heart. You look after them like no one's business. Would you put your hand on your heart and tell me that your clients truly understand what the crypto space is about? Or are they more about trusting you to guide them on this path?
Yeah, so I guess two things there. One is definitely that's, our job is to sort of be stewards or Sherpas in this kind of new frontier. And that's why we spend, all day doing this stuff, and our clients get to spend all day with their, families or doing whatever jobs they have. And so it's definitely a trust relationship. I think if we can't have trust in society, we can't get very much done at all. And so, yeah, they trust us, and nobody fully understands what's going on in the crypto space. It's evolving so quickly, but just like I put some of my money with JP Morgan, and I don't really know what they do with it other than, what the final number is at the end of, I can check on an app or whatever. And so I think that that's perfectly fine. But I do think that, bringing up the idea that you mentioned with Gary Gensler and SEC regulation is a perfect example of what happens with government trying to protect people and the actual outcomes. And so, for example, there's the accredited investor rule, which says that there are certain investments, mostly private investments, that you have to be an accredited investor, which, is the definition of it is basically wealthy and high income. And the best investments in the world are those investments. It's things like venture capital or private equity that have 10, 100x, 1000x returns. And that's really one of the only ways to have life-changing wealth that gets you out of a cycle of kind of debt slavery. However, because the SEC is trying to protect people from getting fleeced, which certainly happens, and there's certainly bad actors, they restricted it basically to the people that already have lots of wealth. And so the government, I think, has very blunt tools and is forced to work in a very gross, broad way in order to protect people, but it also has secondary effects where it excludes people, locks in certain socioeconomic structures that aren't necessarily just or sustainable, and just kind of makes the rich person richer in the name of protection. But the government, what they're protecting is effectively the people that pay their bills, their taxes, which are large corporations and the very wealthy. And so just like I take care of the clients who pay us, the government takes care of the big clients that pay them. And so their idea of what's protection or safety is maybe different than what it is for a person struggling to make rent and working 3 jobs while raising children. And so I think that the issue, though, is, people act fraudulently and are bad actors, and we don't have enough time in the day to parse through which things are reasonable and responsible and which of them are fraudulent. And so I think it puts the government in a really bad place. I don't think their goal is to keep the poor poor and the rich rich, but how do you protect people from from all these bad actors, I don't have any good answer to that, but I think just preventing, most people from having access to the things is probably not a great answer. And I think there's newer technologies that probably offer better solutions. There's last thing I'll say is, there are non-wealthy software developers who are making these cryptocurrencies who are technically not allowed to invest in them because they're not, an accredited investor. But then there's, somebody who got wealthy in real estate and is 80 years old and can barely turn on a computer who's qualified to make that assessment. That doesn't seem like a great filter for deciding who's qualified or safe and who isn't safe. It's just a legacy of a pre-technology era in how we legislated and regulated the world. I don't know. It's just very problematic, I would say.
Well, it might become even more so in the very near future, because just a couple of minutes ago, a report came out, which the minute I saw it flash across my screen, I clicked on it, and it says, the title is, Why SEC Chair Gary Gensler Doesn't See Cryptocurrencies Lasting Long. And I'm just going to take this one sentence out of here. Crypto is not a viable long-term form of private money, and stablecoins are equivalent to poker chips at the casino. So with this kind of thought process in mind, what do you think this will do when this kind of headline hits the open media? What do you think people are thinking? Let's just say, in general, would you not agree with me that this tomorrow will have an impact on the price of Bitcoin?
I'm not sure that it will. I think, first of all, the majority of cryptocurrency activity happens outside of the United States. There's been some negative press and media about Bitcoin and regulation and, drug traffickers and the dark web for so long that really it couldn't get any worse. I think also that, regulation in general is a good thing. It allows for clarity and for major banks and financial institutions to participate because they just need rules around what's allowed and not allowed. I think there's, just like the US dollar, there's plenty of good use cases and bad use cases for it that occur all the time. But, the technology is not morality. It's a neutral thing, and it depends how it's used. I think also, to go back to something previously we were saying about China, I think that, though the US government is the incumbent financial power, there's incredible amount of competition from both second and third tier economies that are willing to innovate and try new things like El Salvador, and then groups like China that are trying to usurp or take back some of the control over financial instruments. And the U.S. government, is not going to say it and tell you, oh shit, we're, really at risk of some real threats here that might disturb the balance of power. But they're certainly going to have to move and respond to that. And the fact is, just like the internet, there's no ability to shut off Bitcoin or cryptocurrency. You can try to regulate it in some way, but it's, I think, pretty difficult to really have control over it. And so there's going to be a co-opting or a integration of these technologies and these monies with economies. And, the government's job is to try to wrangle that, keep people stable. And they're also trying to regulate it, and it's a negotiation. And so, the SEC, both internally from other regulatory boards that are also trying to regulate these things, is trying to harness their authority over it. And they're also putting out a kind of an initial bid of, here's what we think it could be. It could be that they're all regulated away and they're not allowed. And there's probably going to be some kind of happy medium. I will say, every big bank in the United States is a major investor and of technologies within the blockchain space. And many of them own or trade or allow for their clients to trade Bitcoin and some other cryptocurrencies. It's not going anywhere. It's superior technology. And I think regulation that's reasonable is necessary. And if it's unreasonable, people will go to other countries, and the money itself is not restricted in any way by, physical lines. And so it's, I think, a difficult thing for a national government to try to regulate a global technology anyway.
I can say something on a more positive note, which is I really believe that in the next 60 days, this is my personal opinion. And by the way, I'm going to actually do a disclaimer right now. Nothing that and by the way, my name is Aviva Ounap. I'm the host of Crypto and Blockchain Talk. Nothing that I or Alex are talking about can possibly be construed as investment advice. Please do your own homework, your own research, and if you have any questions or don't understand what's happening in the crypto space, please go find yourself a professional registered financial advisor. So going back to my prediction in the next 60 days, I really do think that there's going to be, in the United States, because they've already approved them in Canada, the first Bitcoin ETF, the first BTC exchange traded fund ETF. So Is this something that you think you're going to be running towards hot and heavy? I mean, what do you think about the idea of a Bitcoin ETF, or as they call it, the BTF?
Yeah, I think it's been a long talked about milestone in the further financialization and kind of mainstreamification of Bitcoin as an investment vehicle. A lot of the wealth and capital in the United States is in large financial institutions that simply can't directly hold and buy Bitcoin and need some kind of regulated financial instrument in order to participate. And so the approval and access to those things for larger institutions and for clients and for retail traders around the world in a U.S. Regulated way is going to be a major milestone that will both legitimize and de-risk an investment in Bitcoin generally, and also usher in a lot of new capital. And I'm glad that I own Bitcoin prior to the price change that will likely occur after that kind of thing is approved, which is not a question of if, but when.
I absolutely agree. It is a question of when, and I say it's T minus 60 days.
Yeah, a lot of people are saying October. Grayscale, I know the CEO of Grayscale, which is basically the largest, it's a trust structure, but they're trying to convert into an ETF as soon as feasible. And I know that they've hired a ton of ETF job roles there. And I don't think they're doing that because they're just hoping it works out. I think they have a pretty clear plan and timeline of the direction that's going.
Well, this is the thing. I don't like trusts. I like ETFs. Yeah. Trusts make no sense to me, and we actually did a podcast on this. ETFs absolutely trample a trust. So,
definitely.
Yeah, absolutely. So, look, I just want to say, Alex, thank you so much for coming on to Crypto and Blockchain Talk. It's been a real absolute pleasure. You are a complete star.
I really appreciate it. It's very thoughtful and insightful questions. So it was a really enjoyable conversation. Thank you.
Awesome. Well, if you have a lot of money and you want someone to steer your way, it looks like 2Prime is where you want to head to. So that's 2Prime.io. I would like to thank all of our listeners for tuning into this week's Crypto and Blockchain Talk. Please remember to tell your friends and family to download us on one of the many podcasting platforms that we stream this very podcast on. There's over 70 of them. You can find some of them listed on our website, cryptoandblockchaintalk.com. But if for some reason you still don't like what you're seeing on there, you can just Google it and you will find, no doubt, what you're looking for. We are, of course, listed on iTunes, Podbean, Stitcher, Spotify, SoundCloud, every single major one, and of course there's country-specific ones. In addition, we love to hear very positive, lovely comments from you, and you may post them on our social media accounts on Twitter, Facebook, and Instagram. But the most coveted way, the way we love to hear from you first and foremost, is via email. So please email us at education@savvy, savvy, digital.com. In addition, these podcasts play 24/7 on our sister radio station, Crypto24radio.com. Crypto24radio.com plays news, music, these podcasts, and a lot more 24/7. We do know that you have a lot of choice to listen to. Your day is busy, and we really value the fact that you take time to listen to our podcasts. So please be safe, take care, and goodbye for now.